Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Giga Metals. Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Mark Jarvis, CEO and Chairman of the Board of Giga Metals Corp, which trades on the OTCQX Best Market under the symbol GIGGF and on the TSXV under the symbol GIGA. Welcome, Mark.
Well, thanks very much, Matt, and it's a pleasure to be here once again. So I'm just going to get going here. Big news last week. We came up with our pre-feasibility study that we've been working on for well over a year, along with our partner Mitsubishi. Here's the standard disclaimer language. So our Turnagain project is a joint venture. It's held in a joint venture company that we own 85% of, and Mitsubishi Corp owns 15% of. Just a bit of clarification: people assume that we're dealing with the Mitsubishi that makes cars, and that is in the same organization, but it's a completely different division. We're dealing with the commodities trading division. They are the largest commodities trader in Japan, and Mitsubishi likes to help develop mines. They like to end up with a minority interest, 20 or 25% typically by the time the mine is in production. But they get involved at the development stage, and they're there to help it get built. They've got tremendous financial depth, and that's kind of the model that they're following with us. So here's some of the highlights. We're looking at a 30-year mine life that's producing, in a typical year, and most of the years, it's producing more than 35,000 tons a year of nickel and more than 2,000 tons a year of cobalt in a beautiful, clean concentrate, 18% nickel, 1.1% cobalt, and very low in deleterious elements. This is a beautiful product. Our initial capital cost is $1.9 billion US. Our site operating cost $385, and our C1 cost, which accounts for transportation and for smelting charges, is $465 a pound US. This project has an incredibly simple flow sheet, and that spells low technical risk. So that is a real strength of our project. We also went through a very successful geometallurgy program where we took 70 samples from all different parts of the three-dimensional ore body and performed metallurgical tests on them, and the chemistry and the grades ranged from high grade down to waste. And we developed a metallurgical recovery algorithm out of all that work that had very narrow error bars. And this is a significant de-risking. Mitsubishi's very happy. We're all very happy about this. If you can predict how much recovery you're going to get from a given block of ore, it's very powerful. Now, this is a product that we are modeling selling to a smelter at typical smelter firms terms, and the reason we're doing that is that's a market that exists. We think the market is changing and will change over time. So I just want to point out that this is a product that is really amenable to pressure oxidation, so sort of downstream refining to chemical forms of nickel that are right on the supply chain towards PCAM and CAM and ultimately the cathodes. This is very large open pit mine, and by large I mean 35,000 tons a year of nickel is a giant mine, and the strip ratio is 0.4 to 1. That's a very low strip ratio. I don't know of any other operations that have a strip ratio that low. That is extremely helpful to this project. We're a low carbon operation. Our carbon intensity in this PFS is 1.8 tons of CO2 per ton of nickel produced. That is extremely low by world standards. And that is not including that our tailings management facility will sequester CO2 directly from the atmosphere, considerable amounts of CO2, and this sequestration is measurable. So, it's a pretty interesting operation, and all these attributes, I can tell you, are of great interest, particularly to the European car manufacturers. So here's our economics. We've assumed a nickel price of $9.75 a pound, which is actually above, of course, we came out with this and the nickel price promptly dropped. But the 20-year average price of nickel in 2023 dollars is 19% higher than this base case price. So, we don't much care, and neither do the strategics that we're talking to, what the price of nickel is today, other than the psychological impact that it has on the market. But in terms of, we won't be producing for another, say, 5 years. So what's the price of nickel going to be 5 years out, 10 years out, 15 years out? That's what we care about, and that's what the people we're talking to care about. So we've also used a discount rate of 7%, which some people might raise an eyebrow at. Typically, base metal projects use 8%. And the reason that we've done that, and that the engineers felt that that discount rate was appropriate, is that Mitsubishi is our partner. And so in reality, when this mine is being built, the debt capital, you might have a cost of capital of 2 or 3%. So they felt it was very appropriate to use 7%. And something you'll notice that's a bit odd is that the pre-tax internal rate of return is lower than the post-tax internal rate of return. And this is because of a Canadian program that is to incentivize the construction of critical minerals mines. And they actually give you money back. And so the accounting firm accounted for all of that. And at this price, you end up with this funny looking result that the IRR is higher than the post-tax IRR is higher than the pre-tax IRR. Now, just for context as well, people are kind of used to seeing gold plays with, perhaps an IRR of 30% or 40% or something like that. And that's appropriate for sort of, a project with a short life. So under 10 years kind of thing. If you've got a very long life base metals project, your hurdle rate is really around 10%. And so all the people we're talking to are happy to see this. Something else I'll say about this whole process of doing the PFS is that everything is done conservatively. For example, our CapEx, the engineers went out and got quotes on all the major equipment. So they're not guessing, they're using current quotes. And Tetra Tech is a very conservative engineering firm. We've got a very conservative in-house engineer. And then Mitsubishi has their own external engineering firm that was keeping track of the whole program. We're having monthly meetings with them on the PFS. So this is a document with no BS in it. It's just very, very straightforward and a very honest document. Here's a bit of sensitivity. So the high price case with nickel at $11.22 a pound is still below the 20-year average price in 2023 dollars. And you can see that the post-tax depreciated net present value then goes up over $1 billion US. The low price case, the post-tax NPV is about $21 million US, which is about what our market cap is right now. So that's kind of an interesting coincidence. If you believe that the long-term price is going to be, $8.30 a pound for nickel, then you probably shouldn't be investing in the nickel space. None of us in the business believe that. we're in a good mining jurisdiction, and we are in the middle of Tahltan and Cascadena territory. They both have overlapping, traditional use claims right at our project, and they're both very good to do business with, very businesslike, and generally in favor of responsible mining. So that's a real plus for this project. It's you know it's luck of the draw where the deposit is. We happen to be dealing with good neighbors. And here's our reserves statement. This is our first reserve statement. So this is what we can mine in this mine plan. It is just under 1 billion tons of ore. Giant deposit again. Now, what I want to show here is in this Horse Trail Northwest territory, that's where the open pit is. That's where we're mining, and that's where our reserves are. But we've got exploration potential just on and on. We think volumetrically, less than 20% of, of this deposit have been drilled off. And we've got very interesting results, like from the Highland Zone. Historically, we've got drill holes in there that are, 3 or 4 kilometers away from our resource that are very similar to what's in the resource. The Ridge Zone, we've got no exploration. The Cliff Zone has nickel, copper, and elevated platinum and palladium. It's a very interesting place. We just never had the budget to be able to drill all of this off because it's such a large feature. But my point is, we will set up with a 30-year project life, but there are very good odds that the project life will get larger as we go. Now, this flow sheet is, as I said earlier, very simple and therefore very low risk. Crush it, grind it, float it. And it's very similar to the flow sheet of a copper porphyry project, except even simpler. Copper porphyry projects also have to, take out the gold, which is an extra processing step. And so this is, I would venture to say that of the large undeveloped nickel projects of the world, we have by far the simplest flow sheet. And this flow sheet consistently produces a very high quality concentrate. Very low in, arsenic, mercury, cadmium. And again, just a, beautiful product. Like a premium product as far as a smelter is concerned. Typical nickel concentrates these days are around 10%, maybe 12%, down to 6%, even 4% nickel. And with more deleterious elements than we've got. So from a smelter's point of view, if you buy our product, you've got something that you can then buy cheaper, dirtier concentrates and blend away your problems by using our product. But again, also we know from past work that we can put this through a pressure oxidation facility and make MHP that is higher quality than what's coming out of Indonesia because of lower manganese. And this is what the production profile looks like for the 30-year project life. Ramps up, and then it produces around the average for most of its life, and then it tails off at the end. So there is a lot of demand shaping up for nickel. And this is just, fairly recent. It seems like there's announcements every week of new gigafactories being planned. And there simply isn't enough nickel. Certainly not enough in North America to feed this demand, and worldwide, it's demand is going way up as well. It's obviously not just North America. So where's the nickel going to come from? Well, I think we've got part of the answer. The Inflation Reduction Act is helpful and increases the nickel demand that's projected by 2035 from 607 kilotons to 695 kilotons, just remarkable growth in demand. And again, where are you going to get the nickel? And this is even more stark. Um, just for batteries by 2040, it's projected that demand will be 3.3 million tons a year. You need 120 new large nickel projects like Turnagain of a similar size, 35,000 tons a year. You're going to need 120 of them to meet demand. They just don't exist. And that's why I'm so confident when I talk about the nickel price 5, 10, 15 years out. I don't care what the price does today, other than, for psychological reasons. And if you look at this, nickel prices, they're a bit volatile. Um, that black line represents 2023 dollars. And you can see that every so often, the price of nickel goes crazy. And nickel producers kind of limp along during the down periods. They make a bit of money. It's nothing great. And then they absolutely blow the doors out for like 3 years. I think what's happening is the nickel market is changing fundamentally because of the rise of nickel in batteries. And I don't know when the next spike is going to happen. It feels like it's going to happen in the next, sometime in the next 5 years, is my guess. But I also think that when it spikes the next time, it's not going to come right down to earth again because it's fundamentally changed. The market is fundamentally changed. It'll spike and then it'll settle down to a level higher than we're at today. That's my guess. Just a bit of comparison with Indonesian laterite projects. We're talking about an open pit mine, which is a great big hole in the ground, but it's got limited extent laterally. You're going deep. These laterite mines in Indonesia, they're strip mines. The deposit is maybe 10 meters thick, and they just go on and on and on, mile after mile, in many cases stripping down tropical rainforests. They process this dirt and clay very aggressively with sulfuric acid, and then in many cases they're just dumping their tailings straight in the ocean. So extremely high carbon footprint. And I guess my message is, if you're sourcing your raw materials from Indonesia and you think you're saving the planet, you're not. It's unbelievable what's happening there. And I think in the modern times, it's hard to hide that. Our tailings management facility, this is the valley where it's going to go. And this is at the bottom is a plan view of the tailings management facility. You can see it's a small pond of water in the middle, and then large beaches of silicate sands, which are our tailings. And these are the sands that will absorb CO2 from the atmosphere and convert the silicates to carbonate minerals, and just suck in a whole bunch of CO2 over the life of this mine. If we can get the methodology that Dr. Dipple at UBC has developed to measure this, then if we can get that methodology certified, then we'll be able to claim carbon credits for that. This tailings management facility, in our engineering report, we're spending a lot of money on the tailings management facility. It is an expensive way to build it, but we have gone for absolute safety in what we do, in terms of our dam construction. So, and I think it's not only worth it, it's necessary if we're going to realistically be permitting this and going through an environmental assessment and satisfying the First Nations that we won't endanger the Turnagain River. We just felt this is the right thing to do. And it's also the necessary thing to do. Now, again, this is about carbon intensity, and the Indonesian and Chinese NPI and the ferronickel, it's all very, very carbon intensive. And so, if you're interested again in driving an electric vehicle because you want to do good for the planet, you would prefer a sulfide source for your raw materials. In our PEA, we were at 2.24 tons of CO2 per ton of nickel produced, and that's dropped to below 1.8. And that's because of the selection that we've made of the mining equipment. We did not model an electric mining fleet because vehicles the size that we need here, they don't exist yet. That is evolving. That market will change, and we believe that we'll be able to access an electric mining fleet, which will both reduce our cost, but also reduce our carbon footprint to almost zero. And then if you add in the sequestration, we could get to below zero for producing concentrate. Now, I haven't put a timeline in this because it all depends on money. And we are looking for the next round of financing. We think to get from where we are through the feasibility study and the environmental assessment to a final investment decision, it's going to take about $50 million US. And we are talking to strategics about that. We are not planning to issue stock to get that money. And I also don't want to get half pregnant, as they say. I want to get all the money to go all the way to the finish line with this. And we're talking about selling pieces of our working interest in Hard Creek Nickel, our subsidiary, on the same model as what Mitsubishi has already done. So it wouldn't make any sense to put out stock when we're at a market capitalization around 25 or 26 million Canadian. Not going to do it. Don't have to do it. And so that's our plan going forward. Once we've got the money, then we can maybe fill in some dates here. And again, I just like to draw attention to a couple of members of our board in particular who have particular expertise in the nickel business. Martin Vidra, our president, 31-year career at Sherritt. He's an engineer, but he is also he sold nickel and cobalt products to end users for much of his career at Sherritt. So he knows all the strategic players and knows them well, and they know him. So he is leading our internal process to find the next partner. And I give him full credit for originally finding Mitsubishi and bringing them on board. Bob Morris, another director of ours, before he joined us, he was a senior vice president at Vale, the giant iron ore company that bought Inco in the last market cycle. And he was in charge of worldwide sales for base metals, copper, nickel, but also gold and PGEs. Big portfolio. He also knows all of the strategics. And so we've got a pretty good team here for finding that next partner. Here's our market cap. And I am going to open it up for questions now. There's a question, how much capital did Mitsubishi commit to the project? It was $8 million. There's a question, are we able to access any funds available by the IRA or other US Canadian incentives? Yes. And with the IRA, we were talking to the Defense Department, for example, and they originally said, well, we're not interested in helping to fund anything unless it's already at feasibility. And then they came back to us because there was nothing that was already at feasibility. And so they said that, well, we'd be interested in helping to fund from pre-feasibility to feasibility. We've just put out our pre-fees. We fully intend to talk to them again. But there's also infrastructure funds available from the federal government in Canada, earmarked to support infrastructure, in support of critical minerals development. So what does the PFS mean for the company in terms of its near-term progression? Well, there have been a lot of potential investors, strategic investors, car companies, battery companies, major mining companies waiting for this PFS. And so now that we have announced it. It's not actually, the full PFS is not actually on CDAR yet. You've got 45 days from announcing the material parts of it before it needs to be filed. We think it'll be filed in 2 or 3 weeks, and that's really the starting gun for deal time. A lot of people have been waiting for this, and I think things are going to speed up a little now. Can I speak to the infrastructure needs at Turnagain and First Nations relationships? Yeah, the infrastructure needs, first of all, are the power line and the road. And right now, those are carried in our financial model as if we will spend the money for those things. But these tick all the boxes for the federal money that's there to invest in infrastructure. As the minister said, lines, power lines, and roads. That's really what it's all about, and that's what we need. And the First Nations issues, again, the Tahltan and the Casca, we've got good relations. They're doing very well out of the mining business. They happen to live in territories with a rich endowment, a rich minerals endowment. Any indications about when the funding might be secured? Well, in my perfect world, we'll have it by the end of the year. That's maybe ambitious, but it's also not impossible. There is a lot of interest, and I'm in a bit of a hurry because I don't want to lose a year. I'd like to have the money in place by February at the latest, so that we can plan and execute a development program at the property this summer. So by the way, when you build a mine in northern BC, an open pit mine, it operates year round. And in fact, it operates more efficiently in the wintertime because you don't deal with mud. But for exploration and development, really where we are, the season is from the beginning of June to maybe the middle of October. So if you have a lot of work to do, you got to plan it ahead of time. You've got to hire drillers. You've got to hire all sorts of different crew, and you can't really do that until you've got the money. So that's why I'm in something of a hurry. Our company has enough working capital to get through, more than another year. So in that sense, I'm not desperate, but I would like to speed this all up. Can I give an overview of the joint venture with Mitsubishi? What is their impression of the PFS? This has turned into a really, really good collaboration. It's just we're working with a group of people. We all get along. We seem to like each other. They are particularly impressed, not so much by me, but by Martin and by Lyle Tritton, who's our manager of development. He's our in-house engineer. And Lyle is very good at explaining where they're at with the PFS as we've gone through this process. Mitsubishi has also had an outside engineering group following the progress of this, and that has turned into a really good collaboration as well. This is an outside engineering group that's come up with, have you thought of this? Have you tried that? Very, very constructive suggestions. And so it's been a very good collaboration led by Lyle Tritton. Just a fantastic relationship. I can't say enough about it. What else have we got here? I think we've run out of questions. So with that, let me just mention that if anybody thinks of questions later and they would like to request a one-on-one, you can contact Holly and she can arrange it, I think, through this platform. So thank you very much for attending, and talk to you next time.